setting up a rescue fund with a specific cash value. The state will allocate cash to Italian banks on a case-by-case basis and in exchange for non-voting shares. Italy will also become the guarantor of last resort for bank deposits of up to €103,000. And the UK government is taking legal action against the Icelandic government in an effort to recover UK taxpayers' deposits in Landsbanki that was nationalised earlier this week. Iceland also seized control of a second big bank, Glitnir. The market is now focused on top bank Kaupthing, which was forced to take an emergency loan from Sweden on Wednesday. Meanwhile, the central bank has abandoned efforts to support the currency. Iceland is near national bankruptcy and it has turned to Russia to ask for funds. Negotiations will begin next Tuesday for a loan of up to $5.5 billion.
Well, as we've been talking about, oil prices are sliding on concern that the global financial crisis is going to drastically crimp demand. We are getting some market chatter, though, that OPEC is mulling a production cut to help support prices. Let's get more on the energy markets right now with Jonathan Kornfeld. He's Director for Asia at Hudson Capital Energy. Jonathan, thank you so much for joining us today on Capital Connection. Look, how do you read what we're seeing in the oil markets right now? Is that a reaction to just potentially what could happen with demand? Or is it a reaction to the EIA stocks that came out overnight, or just to this sort of fear and panic that's just driving people irrationally?
I think it's the third thing, and you said it earlier in the program, that volatility right now is the name of the game. That's what's driving the markets right now. There is no stability in the energy markets, and that is really what OPEC craves right now. They need stability. Of course, they'd rather have higher prices than lower prices, but they need stability. And you're not going to get stability in the energy markets right now until you get stability in the equity markets and the financial markets. That's not going to happen until you get stability in the banking sector. And nobody really knows how to fix that problem right now. So I think that this extraordinary level, this sustained high volatility that we're seeing in the energy markets, historic volatility in crude oil and implied volatility in the option market, is just, it's not going to go away. And what OPEC is worried about is the market continuing just to drift lower. Now, some of the more hawkish members of OPEC, Iran, Iraq, Libya, Venezuela, Ecuador, that are really pushing for an emergency meeting, first of all, and then a cut. And the emergency meeting would be in November, I believe, in Vienna. Now, what the interesting thing is, with the financial flows being pulled in all sorts of directions right now, depending on the panic of the day, if OPEC actually does cut, if they announce a cut and they actually do it, it takes a long time for that to go into the market. And with the financial flows by hedge funds and banks pulling their longs out of the market right now, you still might see the market just dip even further. And what this might do is just inject even more volatility, which is the last thing that they want into the market.
I see. So, in other words, then it might be counterproductive for them to actually cut production targets, because it would make it would drive the price even lower and introduce more volatility.
Right.
What then are its options other than just wait it out? I
think, well, you know, from their point of view, that's just speculation, what I said, that it might inject more volatility. I think it would, especially in the short term. On their side right now, you see low inventories right now in the world relative to historic levels in terms of just oil sitting around. So there certainly is not an oversupply of oil in the world. And it's interesting, just several months ago, when we were $60 higher, almost at $150, there was no extra supply put into the market. It was, the prices were so high, people couldn't afford it, caused the price to come lower. But now that we're starting to overshoot on the downside, you are certainly going to see OPEC come in and cut supply. They couldn't add supply before, but they're definitely going to cut it on the way down.
Jonathan, it's Rebecca in Europe here. I mean, you're right, there's so much volatility going around, but behind all of that kind of volatility, what's the real fundamental picture here? What's going on with supply and demand? So where will we be when we kind of come out of this volatile phase? Sure.
Well, first of all, as I said, world stocks are still somewhat low in terms of crude oil. Second of all, you have to take into account the economic impact of what is happening in the banking sector right now and in the financial sector. Once that's cleared up, you're still going to have fallout in terms of economics. You're still going to have fallout in terms of demand on Main Street, as is the popular phrase right now. So you've seen an enormous amount of demand destruction in the U.S. as well as in Britain and Europe, and India, China, and the rest of Asia. That demand is not growing as fast as it was. It's substantially slowed down. So once this economic turmoil filters down to the rest of the world and to the consumers, you're still going to see demand continue to drop, even once the financial system is actually sorted out. However, at the same time, OPEC and the oil-producing nations don't have the extra supply that they would like to have at this point.
Okay, Jonathan, thanks for joining us today.
No problem.
Jonathan Kornfeld, Director for Asia at Hudson Capital Energy. Coming up next, we'll check on the latest currency crosses and discuss with UBS and how to protect your wealth during these turbulent times. Stay tuned.